Hello, everyone. Happy Thursday. Hope everybody's having an awesome day today. Welcome to our Tip Thursday. I am super pumped for today's live because it's on a topic that I think is going to blow up the 2021 tax season, and that is the child tax credit. I think this is literally going to be the thing that makes like accountants want to pull their hair out, and it's going to be the thing that gives a lot of people stress. And I'll explain why as we're going through the training today. But if you've got kids, I want you to listen up. This training is, I think, going to be really important for you. So I'm going to go ahead and share my screen so we can get started here. And just as a reminder, as always, if you have any questions while I'm going through this, feel free to put them in the chat in the comments, and I will get to those ASAP. But let's go ahead and share this. So the child tax credit, it's been around for a while, actually. I'm going to talk about what it is when we get through the slides, but this is one of the pieces that has seen quite a bit of change over the last year and a half because of the pandemic. And so again, if you've got kids, there's a pretty good chance that you have been taking advantage of this tax credit. But there have been some big changes, and that's why I would love for you to listen up to this today. So what we're talking about today, we are talking about kids, those cute little fun creatures that we all love so dearly. But I am guessing that for many of you, sometimes having kids actually feels a bit more like this, right? I've got a 4-year-old, so this is pretty much my life right now. Stuff everywhere, stuff sticks to everything. That's what's going on in my world. The cost of raising kids is really high, right? In fact, I sent out my email about this week. I think it was something like $238,000 is what it costs to raise one child from 0 to 18. And to be honest, for those of us who live in more expensive areas like Boston or San Francisco or New York, the cost is actually I wouldn't surprise me if it's double that. So really expensive to raise kids these days. So because of that, the government introduced what they call the child tax credit, which is basically a tax credit that each taxpayer, or not each taxpayer, but taxpayers receive for having kids. And historically, up until the recent changes because of the pandemic, the credit has been $2,000 for every child 17 or younger. So it's not a bad tax credit, right? It's a pretty decent number. Now, in the past, one of the things that I don't actually have in the slides, but I want to mention here is in the past, this tax credit has been what we call non-refundable. So generally speaking, tax credits can be refundable or non-refundable. And when we say something is non-refundable, what we mean is you get that tax credit up to, or really down to, when your tax liability hits 0. So let's actually take a step back here for a second. I think this is really important to understand. There are 2 types of things on our tax return that save us money. There are tax deductions, things like our mortgage interest and our property taxes and business expenses if we've got a business. Those reduce our income to get us to taxable income, which is the number against which we apply a percentage to determine our tax liability. So for example, if I have $100,000 in income from my business, and then I'm able to take, let's just say a $10,000 deduction for my mortgage interest, my taxable income is $90,000. We'll apply the tax rate against that $90,000 to get my tax liability of some amount of money. That's a tax deduction. A tax credit, on the other hand, doesn't reduce your income, it reduces your tax liability. So let's use my same example where my taxable income is $90,000. For the sake of ease, let's just say that the tax liability on $90,000 is $20,000. A tax credit is actually going to reduce that $20,000 tax liability dollar for dollar. So if I've got a $4,000 child tax credit, 2 kids, $2,000 each, $4,000 bucks, that's going to reduce that $20,000 liability down to $16,000. So tax credits are better than tax deductions in that they reduce your tax liability dollar for dollar. So back to what I was trying to explain, when a tax credit is non-refundable, it means that it only reduces your tax liability down to 0. It can't go any further. So let's use a different example. Let's say my tax liability is $1,000 and I qualify for a $2,000 child tax credit. Well, in the past, I would only get that $1,000 because I would only get the amount of the child tax credit down to zero tax liability. So if my tax liability is $1,000, I get a $2,000 child tax credit, but I can't take all of it because I can only reduce my tax liability of $1,000 down to zero. The IRS wasn't going to send me that extra grand as a refund. That's what a non-refundable credit is. A refundable credit, on the flip side, means that you can go below zero. So in my same example, $1,000 tax liability, $2,000 child tax credit, they're going to reduce my tax liability down to zero. And then that additional $1,000, they're going to actually send me as a refund. So the good news with the child tax credit is one of the changes they made as part of the pandemic is to actually make it fully refundable. Now, that's probably not going to be the case forever, but it is the case right now. So we're going to celebrate that for 2021, that even if it reduces your tax liability to zero, it's going to keep going. So child tax credit, $2,000 for every kid, 17 or under. But they expanded it this year and actually last year as a result of the COVID-19 pandemic. So they added on an additional component, which is $1,000 per child or $1,600 per child if they're 5 years old or younger. So now instead of $2,000 per kid, you can get $3,000 or even $3,600 per kid. But, and there's a very big but, there are income limitations. So, and the way they look at these income limitations actually depend on which portion of the credit you're looking at. So the original credit or the expanded credit. Now, the original credit is $2,000. Remember that $2,000 we talked about, right? So if your income, if you're a single filer and your income is $200,000 or more, your AGI, which is adjusted gross income, it's a slightly modified income number on your tax return. But if your AGI is $200,000 or more, that $2,000 child tax credit is going to start to phase out. Now, that number is the same for if you're head of household, but if you're married filing joint, that original credit starts to phase out when your AGI is $400,000. Now, the expanded credit, which is the $1,000 or $1,600, depending on how old your kid is, that phases out much earlier. So if you're single and your adjusted gross income is $75,000 or more, that expanded credit is going to start to phase out. If you're head of household, it's going to start to phase out at income of $112,500. And if you're married filing joint, it's going to start to phase out when your income hits $200,000. So it may be the case that in 2021, you actually fully qualify for the original credit of $2,000, but you may be completely phased out of the expanded credit of $1,000 or $1,600. And, the reason they did this is because they wanted to get more money into the hands of families who are really struggling. So families who had these lower income numbers, but had kids, they wanted to make sure they got more money into their pockets. Now, keep in mind that this is literally based on your income in the current year that we're talking about, right? So it may be the case, let's say in 2020 or even 2019, maybe your income would have been above these thresholds, but maybe unfortunately someone lost their job or your business has really scaled back because of the pandemic. So it may be the case that now you actually do qualify for either the original credit or the expanded credit or both when you wouldn't have in the past. So this is a fluid thing in that you might qualify in some years and not in others. Now, if your income hits these levels, your total credit starts to phase out and it's reduced by $50 for every $1,000 you exceed the limit. So if you're trying to figure out exactly how much it'll be reduced by, you can get a sense by doing that math. So how does the actual credit work? How do we get this money? Well, I kind of already alluded to this, but you basically get the credit when you file your tax return. There's a form for it. You tell them how many kids you have. They look at your income, and then they determine, okay, you're entitled to X number of dollars for this credit. And like I said, it reduces your tax liability. And right now, it also potentially sends you a refund if you have more credit than tax liability. However, because of the pandemic, the IRS decided to make advance payments for 50% of the amount of the credit they think you're entitled to. So they started these advance payments in July. They go through December of 2021. And basically, they are sending folks money every month, usually depositing it directly to your bank account if they have your bank info, if not sending you a check for 50% of the credit they think you're entitled to. And that's the combined credit, the original and the expanded. Now, a couple of things I want to bring to your attention, because this all maybe sounds pretty good so far, right? But here's the problem, and here's why I said at the beginning that I think this is going to be the biggest headache of 2021, is because I think there are potential pitfalls for where this can go very wrong. And the primary reason is because the IRS is basing your eligibility for this credit on last year's income, which means that if you made more money this year in 2021 than you made in 2020, you may no longer qualify for this child tax credit. So they're sending you advance payments based on last year's income, thinking you'll qualify. And if you made more money this year, all of a sudden you don't qualify anymore, but they still sent you this money, which, by the way, you have to pay back. We're going to talk about that in a second. This also means that if you made more money last year, so let's say you made more money in 2020 than you're going to make in 2021, you might actually qualify this year, but you're not getting those advance payments. Now, spoiler alert, that's not the worst case scenario, because you can still get the credit you're owed on your tax return. It just means you have to wait. It means you don't get the benefit of those advanced payments that other people get. The other thing that you need to be aware of is if you have a kid this year, you actually aren't going to get those advance payments either unless you logged into the IRS's website and told them that your family status changed. Again, not the worst case scenario, because you can get the amount you're owed when you file your tax return in April, but it still stinks that you don't get those advance tax payments. And I didn't put it on this slide, but if very sadly you're in the position of where you lost a child this year, the IRS isn't going to know that. And so they're going to send you an advance payment for the child tax credit, assuming that child, is still with us. So TBD on exactly how that gets worked out, but that could create an issue as well. So potential issues for folks. Now, the bad news, and I already said this, is that if you receive advance payments that you do not qualify for, you have to pay them back, at least as of right now. I was hoping that because of the pandemic, we might see the government come out and say, you know what, we're not going to make you pay them back. They did this with stimulus payments, where if you received more stimulus payments than your income ultimately qualified you for, you didn't have to pay the excess back. I have not, frankly, heard any rumblings of this being a thing for the advanced payments for the child tax credit, which I think is a very bad idea, because, again, I think we're going to have a lot of folks who are getting these payments and then all of a sudden do their tax returns and realize they don't qualify anymore, and now they got to pay this money back. I think it's going to create an issue. But again, as of right now, the IRS hasn't made any changes on this front, so you've got to pay it back if you get more than you qualify for. This is why, if your income is close to those thresholds I mentioned, I highly recommend setting aside this money. If you have been receiving it, setting it aside so that you have it in case you have to pay it back. You also had the option at one point to log on to the IRS's website and tell them to stop making the payments. I don't believe you can do that anymore, because there's only one payment remaining, which is December's. And I think they've shut off the ability to make any changes at this point in coming up to that last payment. But if you can get onto your account and still make that change, then maybe it's worth doing. But this is the thing that I think is going to cause the biggest headache, and I want people to be aware of. Now, this is the website. It's a long address, so I apologize for just kind of having this up here. But this is the website where you can go to access your account to get information on the payments you've received, on the payments you're going to receive, to stop your payments if that's still an option, to update your family information and all of that. In the past, you could go here to update your bank account information. Again, I don't think you can do that anymore because there's only one payment left, and they're already starting that processing. But the website is www.irs.gov/credits/child-tax-credit-update-portal. We will drop that in the comments, don't worry. But that is where you can go to get all of the information about the credit. So I wanted to bring this to your attention today, again, because I think this is going to be a massive headache for folks. I think it's one of those surprise things where everybody gets this money in their account. They're like, this is great, free money, this sounds awesome. And then boom, all of a sudden we go to do your tax returns and we realize you got to pay some of that back. I'm hoping that doesn't happen to that many people, but I think it's going to be a headache for some folks. If your income went up, if your income didn't go up this year, then it's probably not an issue for you, but something I'm definitely keeping in mind. So I'm going to leave it there. If anyone has any questions, feel free to put them in the comments, but do not forget that we still have slots on our wait list for our tax prep packages for 2021 and for 2022. And you can grab your spot by going to megkwheeler.com/tax. Now, keep in mind, you might be thinking, well, why are we talking about 2022? What about 2021? Well, 2022, or sorry, let me back up a second. We do our annual tax prep package starting January 1st because we actually support you throughout the entire year leading up to when we file your tax return. And that means we do your quarterly tax calculations. It means we have quarterly tax planning calls. It means you have unlimited access to ask us any of your tax questions for the entire year. Plus, and it means we give you great business resources like our cash flow tracker, our budget tracker, and so on throughout the year. We start supporting you on day one of the year, not waiting until we do your tax return. We, of course, also do your tax return, which is great. And so this annual tax prep package is for 2022 because we start on day one of 2022 supporting you. We also do your 2022 tax return in April of 2023. But the big news is, when you sign up for this by December 31st of 2021, we will do your 2021 tax returns for free. So you want to get on the wait list. You want to grab your spot by December 31st. We don't have a lot of spots. We are limiting it because we are only such a big team, or such a small team, I should say. So you want to make sure you grab your spot. And the other thing I will say too is, everyone who's on the wait list, not only do you get a guaranteed spot, so we're going to shut the wait list off when we hit a certain number. So you get a guaranteed spot, but you also get a treat just for being on the wait list, whether or not you sign up. So folks who have been on my wait list before for any of my programs know that I always offer a special treat when you're on the wait list, regardless of whether or not you sign up. So it's worth you adding your name. And you can do that by going to megkwheeler.com/tax. Now, if you're thinking this sounds great, I'd love to work with you, I need tax help, I'm not sure I need the full annual package, I totally get that. We do also offer tax prep only. So we will also be opening up spots on December 1st for our 2021 tax prep only package. You can get access to the link to that by being on the wait list as well. So if you're not sure you want the full annual package, or you just want the tax prep only, still go ahead and join the wait list, megkwheeler.com/tax. You'll get the treat, you'll get the link, you'll get all the goodies. So all right, my friends, I don't see any questions in the comments, so I'm going to go ahead and wrap it up there. Hope this was helpful for you. As always, we'll be back for a future Tip Thursday, not next week because of the Thanksgiving holiday, but the week after. But make sure, if you're not already a member of my group, that you go ahead and join us over there in the free Facebook group, Badass Moneymakers, which you can join by going to megkwheeler.com/group. That's where I do these Tip Thursdays. It's also where I do a monthly Q&A session, plus have lots of other great resources for you. So hopefully I'll see you over there, megkwheeler.com/group. And don't forget to grab your spot on the wait list for the tax prep packages, megkwheeler.com/tax. I will talk to you all soon. Have a great week.